Continue following our market analysis and get access to other free education, sign up for our free room with the link in the description.
And it's been rather choppy this week. Yesterday, we hit this high right around 3,800. We sold off pretty quickly. I took that to mean that I could start just, slowly getting into some short positions. Looking at the place that we're in the indexes right now, it's one of those things where it's like, well, we're pretty close to the lows on the year, but we bounced slightly, so we could start adding some short positions here. But at the same time, because of the high put call ratio, we could definitely still short squeeze a little bit higher. So I just started adding a few positions on a low risk basis, just because it's always one of those things where you can never time the exact entry point perfectly every single time. And so what will happen is, if you're sitting around waiting for the quote best entry, which I would consider the best entry to the short side to be up here, it would really be around 4,000, which seems crazy, right? It's quite a bit higher. That would really be the best spot for me to come in and short. But because of the way that this market has been so weak, and because of the way that it's been hugging this 8 EMA pretty much all the way down, minus this short squeeze and this short squeeze, um, I really want to still be able to get some positions on, even though it's not the most conservative place to do it. So with all that being said, what is my plan? Well, I was using 3,800 as a key area to try and short against, but again, doing it in a small way, because there's absolutely a risk of this happening. And if we do start to break through this key area of resistance, the next zone is going to be 3,900, and I really wouldn't want to hold my shorts for another 100 point higher move in the S&P. I would rather just get out and reset them at higher price points. So when you're looking at the intraday price action and the way that this has behaved, what's interesting here is we're now starting to consolidate in multiple squeezes. We've got a squeeze on the 78-minute chart. We've got a squeeze on the 195-minute chart. When you're looking at the lower time frame or the higher time frame chart, there's not a squeeze here yet, but at least at the minimum, these squeezes are forming, which means that we have consolidation and it's going to be likely to break out. When you look at the NASDAQ, the NASDAQ is going to be almost exactly the same. You have 1, 2, 3 touch points at this key area of resistance, and you also have these lower time frame squeezes. Now, what's interesting about these lower time frame squeezes is I would technically call them bullish squeezes, just because on these lower time frame charts, we have shifted into an upward trend. So for example, since you made the 11,000 price point, you have shifted higher, you've got a trigger, you're rallying into resistance here, here, and here. So it's one of those things where it's like, well, I hate to say it's a bullish squeeze, because you are running right into resistance that you haven't been able to get through. But because of the way that the trend has shifted, these lower time frame squeezes are pointing that direction, but it doesn't mean they're going to keep going up. When you look at some of the main tickers in the index this year, and we can just start off by looking at the watch list as well and just seeing, okay, what stocks are really moving today. There's definitely some stocks on the move. I would say that some of the more important ones would be Walmart. You also have the cloud computing sector that's up pretty decently. Oxy is starting to move again. We can look at energy, Etsy, Costco, housing, Merck, Home Depot, Starbucks, what's this? Staples. So I mean, you've definitely got some decent movement, and a lot of it is kind of across the board. It's not really just one sector or one area of the market that's up. Most of the S&P, based on this watch list, these are the top 10 tickers in the S&P across the market. They're all up at least nominally. I mean, it's not huge. It's not like they're up, 3 or 4%, but they're at least clinging to some positivity here. And then as you get higher in the watch list and start looking at the stocks that are negative, we do still have the semiconductors that are slightly negative. Tesla's negative today. I think Tesla is going to provide some opportunity here. And it looks like Netflix is going back negative. Airbnb is negative as well. So let's just start off with looking at Tesla. When you're looking at Tesla, I think that the most destructive thing for this stock today is the fact that Elon Musk had some sort of interview yesterday, and his quote was pretty interesting. Let me see if I can give you the actual quote, because I was reading the article and I thought, oh no. I was like, oh no, this isn't good. Tesla's going to go down. There's no way that this can go higher in light of these comments, because right now what we're starting to see is we are seeing, CEOs and corporations start coming out and saying things prior to earnings. So yesterday, Musk was saying that the new factories, which, by the way, this was one of the primary reasons why the Tesla stock price increased so significantly prior to last quarter's earnings, was because they were opening those two factories. And now what he's saying is that both of those new factories are losing billions of dollars as they struggle to increase production because of a shortage of batteries and China port issues. And then check out this quote. Both Berlin and Austin factories are gigantic money furnaces right now, okay? It's really like a giant roaring sound, which is the sound of money on fire. I mean, can you get really... can you have a worse quote than that for like bullish stock price? So anyways, looking at that, I mean, I just can't imagine that that plays out well. And we had already been looking at Tesla. We'd already been looking at ARK in here like every day. And we were looking at the fact that when you look at Tesla prior to earnings, especially in light of the hot zone, because it's now, within that time frame prior to earnings. I mean, the main reason why Tesla rallied so hard last quarter was because of those factories opening. And at this point, we're in a bearish downtrend. We've rallied directly into the 750 price point. And when you're looking at that area of resistance that's being hit, the next targets to the downside are going to be, let's see. So you have 669 and then 650. And I mean, after that, you're looking at 600. So, I just think that this next earnings season is just really going to be all about the weakness that we're seeing in the overall market and all of the reasons why. And most of those reasons are going to be overall macro reasons that are kind of weighing on the market. And the pre-earnings timeframe is just really all about, are investors excited for earnings or not? And at this point, it's like, well, probably not. So when you look at the impact of those comments on the stock price today, I mean, definitely it's a little weak, down $1, or not $1, 1%. It's not, completely falling apart, but we're also not seeing the earnings report until the 20th of July, so it's a little bit less than a month away. But my analysis here on Tesla is that if this is going to break $700, which it's doing right now, that's probably when we're going to see that flush lower. So I do think that Tesla can be traded to the downside. As far as like an actual trade, generally what I would do with that is I would set it up where I would target a zone right prior to the there she goes. Let's see. So here's the earnings report. It's going to be right in here, $133. Let's see. So if you traded lower by $133, which Tesla never moves within the expected range, it would really be, I mean, you're looking at 550. 600, I think, would be probably the better bet, just because it's a big round number and it would give you a little bit of room. But the way that I would look at that would be, so you have a lot of this high open interest here at 600 and also at 650. So, I mean, you could do something like, so if you did something like that, you put on a $50 wide butterfly, and it is going to cost you $5.15. And you're basically, looking at like a 1 to 10 risk reward scenario. So you have $50 wide, you're only paying $5. And the goal would be, you would be looking for Tesla to fall underneath 650. So if Tesla fell below 700, which it's doing right now, and then it continued falling along the way, ideally what would happen is this long 650 put, which is right here, you don't have to pay, $30 for it like you would in in just a long put. By making it a butterfly, you're bringing down your costs substantially. You're also increasing your risk reward pretty substantially. And then you are giving yourself, like $50 of room. So I do like that trade. The only thing I would say about it is that since it is $50 out of the money, the main risk that you would have on this trade would be that if Tesla doesn't fall below 650, that credit or the debit that you paid is going to just evaporate, because what will happen is over the course of 22 days, that debit is just going to lose value more and more until it's not worth anything. So what that would mean is if you stopped, if it stopped working, like let's say that all of a sudden it flipped around and it's, going the other direction, then I would close it out because it would lose value. It would just basically lose value quickly if it stayed out of the money. Does that make sense? So I think that Tesla is going to fall. I think Tesla is going to bring ARK with it because Tesla is one of the main tickers within ARK. It is one of the top weighted holdings. So I've also been talking about getting into a short position in ARK. Just like the indexes, I mean, yeah, I would rather do it up at like 44, but it's always just one of those things where you can at least start averaging in at this price point and then add a little bit more if it does end up going higher. Right now, it seems like the market's a little bit volatile at the open, which is typical for market open. And it's typical for the way that the market's been trading. But what is really important about today is that we actually have not broken through this 3,800 price point. We just have a situation where right now we are still underneath this key area of resistance, and as long as we remain under that key area of resistance, the path of least resistance is to the downside instead of to the upside. So the main zone that I just want to watch as far as being careful about any kind of shorts is this zone, because if we do end up breaking through this, especially with the put call ratio that's pretty high, which means there's a lot of people that are short out there. In that instance, what that would mean is that we could have a short squeeze, and then you'd want to cover your shorts. So I do continue to like ARK to the downside. If you look at the main holdings in ARK, Zoom is going to be the top holding, and then Tesla is going to be right after that, along with Roku, Path, CRISPR, Teladoc, EXAS, Square. So if we look at some of these options, and if we say, okay, well, are any of these going to go higher? Zoom has definitely done a pretty decent job of trading off the lows here. But when you're looking at the potential of continuation, I mean, this is a pretty key area of resistance between 120 and 130. So just looking at that, it's one of those things where it's like, well, yes, it has reversed off the lows. Yeah, you are starting to see a little bit of a head and shoulders reversal pattern, but it also is still up against quite a bit of resistance. And when you look at Roku, Roku to me, I mean, it's basically just trading directly up into a key area of resistance directly before an earnings report that's not likely to be that strong. So when you are looking at Roku in particular, I mean, I think it could trade a little bit higher. You're trading around $90. You have a lot of resistance up at 100 and then 105. So when you're looking at that, it's just one of those situations where it's like, well, it's like, well, this thing can trade a little bit higher, but then it could be a lot more heavily shorted at that level. Then you have Path. So looking at the stock right here, I mean, again, like Zoom, it looks like it's trying to shift patterns and it's trying to trade off lows, but it's still under a lot of key resistance. And most of all, it's losing money. So any company in this environment that's still losing money, like I have no idea what it's going to do in 5 years. I don't have a 5-year timeline, but as far as the timeline right now, it's timeline right now is it's going down and all these stocks are just incredibly weak. So my main focus with ARK and with Tesla now is really going to be to the downside. Yes, you could have Zoom and Roku holding it up just a little bit, but the majority of these stocks they're really weak. So if you're looking at the semiconductors, look just like this. You know, they've been in a continued downtrend. They are weak again today. They remain below the 8 EMA on the daily chart after falling and making some downside targets around the $200 price point. I would love to, you know, try to get back on the semiconductors to the upside if the market actually, shifted. But I mean, this goes back to Musk's comments as well, because the main issues that he noted were the semiconductor shortages. And well, now today, coincidentally, the day after those comments, you have the semiconductors that are all getting a little bit whacked here. So, you've got NVIDIA. This is down almost 2.5% today. We are in a downtrend. You do have a key area of support down at 140. Then you have AMD. I just can't believe how long this semiconductor shortage has just droned on. It just has been one of those things that, in the beginning, it was one of those things that it would cause volatility, but you could just pick up more shares. And then the semis would rally again after it kind of faded in the news. But at this point, the semi shortages have been going on now for, I'd have to go back and look exactly, but I'm pretty sure it started in 2019. Again, I would have to check that date, but that's what I recall. Here we can go back and look at a semiconductor chart. Ouch, that candle's not looking very good. This $3,800 price point has just been pretty swift. All right, so if we go back and if we look at the longer term chart of the semiconductors, so you definitely had like the COVID crash in here. I'm pretty sure that this is when the semiconductor shortage had started. There was definitely a movement right here in 2019 in May. And then this was the weird blip where we went into the bear market for like one day and then the Fed changed course. But semiconductors is like the mother of all head and shoulders patterns. It's a reversal pattern off of the highs. You're breaking down. I think the semis can easily go to like 180. So when you're looking at all that, it just strikes me as something that is going to be pretty pretty weak, and especially with earnings coming up, I just can't imagine that the semiconductors actually like start getting it together. So I do like that. Um So I do like that. To the downside, I do think it makes sense to kind of focus on the semis here. The Nasdaq itself is just trying to hold up. Um, it's it's trying. It's just like barely remaining positive today. Yes, I can share the chart. There is a there's a share link that we have in this room somewhere. Is that in the room drive, or let's see. So do you know how to go to the room drive? If you click on that little folder at the top right of the screen, right near where it says Danielle and where it says the volume, if you go down, if you click on that, there's a list of different files in there. I need to change the name of my file, but the file is called SPM Quick Share Links. SPM is Stack Profits Mastery. But if you click on that, the share links are in there. Does that make sense? Okay, so when you're looking at the free trading room, do you see this folder up here? Sorry, it does something crazy when I try to share my own screen that I'm presenting on. So if you click on this folder that's called the room drive, so that's where everybody puts their shareable things. So if you click on this one, SPM Quick Share Links, I just need to change the title like Danielle's Grids. That would be more obvious. You click on that and it's in there. You're welcome. All right, so let's look at some of these other big names quick. We have 2 more minutes. There's a search box at the top of the pull down. Oh, that's cool. So when you're looking at some of these others, I mean, if Apple, if Microsoft, I mean, if they really start going, then of course we have the likelihood for the Nasdaq to start trading higher here. But when you're looking at the way in which they've really just traded up to the ADMA, I mean, overall it's a pretty weak rally. I mean, they're trying off of the lows for sure, but I wouldn't say that it has very much energy behind the move at all. All of these moves are just a little bit lackluster. They're just kind of reminiscent of summertime trade and just consolidation. So at this point with all of them, I mean, once you meet the 8 EMA, if you're still going, your next target is going to be the 21. You also have energy in focus. This is an area I've been avoiding trading just because of all the politics surrounding it right now. But I am eyeing some potential long-term entries if it can hold after this major flush that it had. So my time is now up, but moral of the story is what I'm focused on here is the key area of resistance that the indexes are in And I'm looking for the weaker links and the weaker sectors to continue shorting to the downside. If we do start short squeezing, then I will roll out my positions for longer dated expirations. Other than that, I hope you have a great day, and I will see you not tomorrow, but on Monday morning. Talk to you later.
For joining us for Simple Stream Week. If you'd like to continue following our market analysis and get access to other free education, sign up for our free room with the link in the description.
Hey, what's going on, guys? This is Taylor checking in for the 10 a.m. Eastern session. All right, Mirza, good to go. Hey, Lorna. All right, guys. S&Ps are trying here. So let's see. As far as the big three signals go, we still have the sell signal on the 2-hour chart, but the S&Ps are putting their best foot forward here, looking like they're trying to get something going. So if we can hold above that 21, and you'll notice the histogram is starting to shift in the favor of the bulls. If we can hold up here, we should get the cancellation of the 2-hour sell signal. I think that's one more step in the right direction. If you're looking for the S&Ps to possibly trade up a little bit closer towards that daily 21, which that's what I'm rooting for right now. If we can get the S&Ps a little closer to that 21, then I think we're getting some shorts on. But as far as a few longs here, guys, we'll take a look at a few of the names we covered yesterday, I think. What's today? Thursday? Yeah, a couple of names we covered yesterday. So GameStop here, I still think this one's got some good structure. You've got the big three buy signals on the 2-hour, 1-hour, 30-minute with a weekly, 3-day, daily, 30-minute, 15-minute, 5-minute squeeze. So if you try to match up a squeeze with a signal, you could look at your 30-minute buy signal and your 30-minute squeeze. So we'll take a look at that bad boy. Sets up pretty good. So we're still looking for, the big level here is going to be 150-ish. I don't have it on the chart. Actually, I can throw it up here for you guys. But you got the daily 200, the 200 SMA, right up around 150. So maybe get a little bit of that potential, triple top type action where it tries once, fails, tries twice, fails. It could fail the third time. Thing I'm noticing here is it does fail, but you get your pullback right into support. Then you get the buyers coming in back at the 21. Second attempt, you get stuffed, but they still come in to pick it up. So I think as long as you hold good structure there on any kind of pullback, does look like it's shaping up for the breakout. So we're liking GameStop here, and then we're liking Zoom. Zoom. So let's check out Zoom here. The one thing I don't love, we're losing the buy signals here this morning. No 2-hour, no 1-hour, no 30-minute, 15-minute. So I would like to see the buy signals pop up pretty soon here. You had a few yesterday, but pretty good daily structure. So I think if I can hold that daily 21, we're looking for a push towards 124, 130. So GameStop, Zoom, you got some structure there. And then as far as the rest of them go, I'm just kind of waiting on buy signals here. So like some FANG stocks. If we look at Apple, all right, it's up 1% today, but no 4-hour, no 2-hour, no buy signals just yet. So nothing for me to do in Apple. Check out Google. We had a couple yesterday, but nothing here today. Tesla. No buy signals here in Tesla. Let's check the big Amazon. So it's still a little bit early as far as my signal goes. But for now, you do got a couple time frames lighting up in GameStop. So for now, that might be my best pick. Second place, I think you watch the Zoom here. But I'll let you guys know if we get some buy signals again. Holds good structure for now, but there's a few potential longs. And then as far as the short side goes, we are going to look to get more shorts going if the S&P's, 385 to 390. If we can get that rally, that's where we're going to look for a couple of shorts. We are keeping a couple of call credit spreads in the back pocket here on Rivian, which kind of behaves pretty well here for a short position, while the S&Ps and the Qs are trying to get a little bit of a rally going. But those are a few picks for now, guys. Let's see, can Tesla join the party today? We shall find out. Yeah, I think if you can get GameStop at the close through 150 here, then I think you got some freedom to run. So a soaring eagle, when I refer to the, or when I say buy signal or sell signal, I'm referring to the big 3 bars, which you're either going to see those on my chart. So like the 2-hour chart, if my candles are green, that's my buy signal. But you can also look over here in the right-hand corner, and that's, the labels for the multi-time frames. So for GameStop, I've got my buy signal, the bullish big 3 bar on the 2-hour, 1-hour, 30-minute. Compared to something like the S&Ps, for example, I don't have any green bars, so I don't have any buy signals, but I still have a sell signal on the daily, the 4-hour, and the 2-hour. So that's, right now, that's kind of why I'm watching the 2-hour chart. We got a little bit oversold, or a lot oversold, but now we're making some progress. We canceled out the 15-minute sell signal, canceled out the 30-minute, canceled out the hourly, but we still got the signal there on the daily, 4-hour, and 2-hour. So kind of like that domino effect. If we can clean up the 15, clean up the 30, clean up the hourly, etc., that's what I'm looking for to trigger a nice move to the upside here. Kind of the cancellation of all the bearish signals. So what I'm trying to do here is just with patience, try to line up some signals with a squeeze. So like Amazon, for example, the only place I have the big 3 bars are the daily chart, or is the daily chart. And it's the red bar, so that's the sell signal. But then if I look over here, I've got nothing on the 4, nothing on the 2-hour. So there might be a 2-hour, 60-minute, 30-minute, 15-minute squeeze. But I'm trying to match that squeeze with a buy or a sell signal. So if I look at the 2-hour, for example, there is a squeeze, but I don't have my green and my red bar. So it's all a little bit neutral. Internals here, ticks. Little bit sloppy. If we check the dollar out real quick. Dollar just kind of consolidates. If we check the VIX, VIX isn't doing too much, but I think we're going to need to see VIX kind of flushing through 28-ish here. If you're going to see that market make that rally. You got ticks coming down to minus 700. Really sloppy stuff here. But as far as the S&Ps go, we get a 30-minute, 15-minute, 5-minute squeeze. So kind of one of those days where we're setting up. And the big question is, which way do they fire? Tough stuff to read, guys. But if you guys got any charts you want to look at, actually, if you got anything you want to look at as far as the big 3 signals go, let me know and I'll throw them up here and we'll see what you guys got. We've got plenty of sell signals. So if you're looking for shorts, we are watching Dick's Sporting Goods. And these are all names we want to short as close to the 21 EMA as possible. So we got the daily sell signal on Dick's. Of course, we have our daily sell signal on the S&Ps, the Qs, the IWM, the Dow, basically every sector. So we're still looking at bearish daily charts. But any little bit of upside I'm looking for here, all super short term. Soaring Eagle, NVIDIA, let's take a look. I've got nothing on NVIDIA for now. So it's all a little bit neutral. So let's check the daily chart out. In terms of where it was a few days ago, where you probably had sell signals on every time frame, definitely a little bit of cleanup here. Just trying to get rid of all that bearish pressure, but not to the point yet where you're seeing any buy signals coming in. But it's trying. It's fighting a good fight. I think one important observation here, guys, is for conversation's sake, if the S&Ps do get up there to like 390, the expectation should be that pretty much everything's going to trade higher. I think one thing to keep in mind, though, is, as far as, okay, we're going to get that rally, where should we look to put the cash? You compare like Google, for example, to Apple. And of course, these are like really slight differences, but I think important. I would kind of look at Google to be one of the few stocks that might try to lead the way here if you do try to get that rally in the market. Reason I say that is you got a little bit of relative strength here. Google's trading at, or we'll call it above that daily 21, and it's already canceled out all the sell signals. So this is just kind of like neutral, waiting on a market. But if you compare Google to, say, Apple, you can see some of the differences. Apple is still, well under that daily 21, and you still have the daily sell signal. Compare that to, say, Microsoft, under the 21 daily sell signal. Let's check out Amazon. Under the 21 daily sell signal. Google is one of the few names I'm watching here. You're not going to get that push without the market. But I think based on the fact that it does hold up a little bit better, and you've already seen it cancel out all those sell signals, might be one of the stronger ones here, if it can get a market behind it. That's what's missing right now. GameStop holds good. Zoom holds good. Now, guys, it's a chop fest. It's a chop fest. William, what do you got here? GPC, let's take a look. I don't have any active signal here right now. So, anytime I don't have an active signal, that just kind of falls under the camp of neutral. So if we just kind of take a look at it, yeah, this certainly looks a little bit neutral. And in terms of what that means, there's no positively stacked DMAs on the daily chart, but there's no negatively stacked DMAs. So the structure is not overly bullish. It's not overly bearish. There's no massive squeeze setting up, right? No buy signal, no sell signal. And that's from the daily chart down to the 15-minute. So all I'm saying is I think if you're going to approach something like that for a trade, you would want to approach it a little bit differently than you'd approach some, it's a good example. Like the energy trends. Now, at this point, I think energy is pretty much, I think it's dead in the water here. But if you look at the last few months here, you got that active daily buy signal, the green big 3 bar. That's the kind of thing I think you're approaching with a little bit more aggression. You might buy some out the money called debit spreads. You might be doing shorter term credit spreads. But because of the signal there and everything that entails, you're looking for that directional move. Where a GPC without any signals, for now it's kind of tough to call the direction. So the only thing you might want to look at here, and here's why it's neutral, is a general statement. It's been in a weekly squeeze. Technically, it fired. But for the sake of discussion here, technically it's been in a weekly squeeze since, let's just say, for the last year. It's been in the consolidation for the last year. That's for sure. So, anytime something goes into that 6 to 9 to 12 month consolidation, it can get a little bit difficult to try to call the next direction. But as far as a few things to focus on, your histogram is positive. This has positively stacked EMAs. If that can continue and this can generally hold above that weekly 21, it all does kind of point towards this squeeze wants to fire to the upside. Just could take a while, that's all. So what I'd be looking for in the shorter term is for these lower time frames to shape up a little bit. Can we get some positively stacked EMAs? Can we get some green 10x bars? Then you might start to see it heat up a little bit more. Well, we got Powell going already. God, didn't we just hear from Powell yesterday? All right, guys, let me just check out the action here for a sec. It kind of holds for now. Tesla, Apple. All right, we'll keep an eye on things. So, Doug, when I say daily sell signal, so anytime you see the red bars, regardless of the time frame, that's my sell signal. So, guys, here's basically the quick walkthrough of the indicator. What I had Eric do was basically take my checklist. So here's the 5 or 6 things I'm looking for that constitute a good short. Here's the 5 or 6 things I'm looking for that constitute, a good long. Gave those things to Eric and had them put them into an indicator. So in other words, and you see the red bar in this example on the daily chart, that means this daily chart fits all my bearish criteria, like the trend characteristics, the momentum, the structure. It's all on my bearish watch list, right? So that's kind of my sell signal. Where GameStop, if I got the green bar and say the 2-hour chart, that fits my bullish criteria. So basically taking my checklist, turning it into an indicator, color coding the candles and plotting it on the chart. So if you ever hear me say sell signal, you can look over here to the right-hand corner and get a gist of what I'm referring to. So something like the financial sector, let me take a look over here and say, okay, Taylor's got his sell signal. He's got his bearish big 3 bar, you can call it, on the daily, the 4-hour, the 2-hour. We look at something like Go. All right, Taylor's got his buy signal on the 4-hour, 2-hour, 1-hour, 30-minute. So, of course, it's just my personal criteria, but that's what it means. This instance, the 4-hour, 2-hour, 1-hour, 30-minute chart, the trend, the structure, the stacked EMAs, the 10x bars, the squeezes, all kind of lines up here. So hopefully that makes sense. Christian, IBM, how's IBM looking? You creative father, be proud. Holds up pretty good here. Yeah, definitely holds up pretty good here. Not too bad. Not too bad. And Christian, you're looking at, was that SIGA? Oh man, Christian. Where were you a few days ago, Christian? So this is kind of a gem in this market. Not too many out there with my buy signal on the daily 4-hour, every time frame. You got the full stack here. So let's see, match a signal with a squeeze. Of course, we have the daily buy signal and your daily squeeze. But you've also got the 30-minute squeeze. I feel like I'm a little bit late on my entry, but nice call out here. Really good call out. Get that big 15 up there. Get through 15. Not too much stopping you there. Nice call out. Nice call out. All right, guys, let's see. We got a few minutes left here. S&Ps. Holding up all right. QQQ. You got to see that big move through yesterday's high. All this funny business under resistance, not going to do us any good here today. You get through the highs, it starts heating up a bit. Give me a second, guys. My fiance just sent me a strange text. Okay. My fiance texted me and said, Coke here. I got no idea what that means. Coke here. Oh, come here. Okay. She'll have to wait a couple of minutes. It's like Coke here. What you talking about? But yeah, guys, 8 or so minutes left here. So if you got any other questions, let me know. Kind of a sit on your hands and wait day. It looks like they want to try to make it rip, though. Couple easy levels here to remember. 3,800. Right, big round number. And you can obviously see 3,800. Gives you a little trouble. Gives you a little trouble. Yesterday gives you some trouble. Tough spot there, but if you can break through 3,800, we're working. At that point, we're working. For the Qs, what are we saying on the Qs here? 285. Those are the spots, my friends. Those are the spots. Roland, how's Lucid doing here? Yeah, she's pumping. How's Rivian? A little more quiet. A little more quiet. Yeah, a few of these Chinese stocks, which I believe Lucid falls under that category. You got a few of them trying to set up here, like Baba, for example. Yeah, see? This started setting up yesterday with the lower time frame buy signals. So let's check this out. 2 hour squeeze, 2 hour buy signal. Yeah, it's a little bit late for an entry, but this was setting up yesterday. So these are the things I'm looking for. 2 hour squeeze. I got the green bars, so there's my 2 hour buy signal. 1 hour squeeze, 1 hour buy signal. 30-minute squeeze, 30-minute buy signal. Was there a 15? No 15. But yeah, that was setting up yesterday. Up 6% today. Not too shabby. Not too shabby. Nothing happening here in Boeing. Crazy markets, right? Tesla was down 2.5%. I think before I jumped on the mic with you guys. Now it's flat. Not for the faint of heart. But let me turn the tapes on you guys. What do y'all got for open positions? You guys got to sit here and hear me talk about my book. What do you guys got right now? We long, we short? Jody's got some BLNK. Looking like it wants to launch here. 30-minute squeeze, 30-minute buy signal. Very interesting. Probably a good example of something where if the market does, make a nice run for it here, You're going to see these kinds of names, like the things that were really beaten down. They're going to have some of the biggest pops. A 30-minute squeeze looks pretty good. Not too bad. Yeah, I kind of like that. Another one that one of the options remembers called out earlier was Weber, W-E-R. That's kind of gonzo at this point. And the other one was Go. 30-minute buy signal. Bunch of buy signals here, but a 30-minute squeeze. I'll be in here tomorrow, guys, just for good examples to track. Let's just take a screenshot of the 30-minute signal here and Go. Go 30-minute. And let's do the same thing there for BLNK with that 30-minute squeeze. And your buy signal. And then when I jump back in here tomorrow, we'll kind of come back to these and see what those 30-minute squeezes gave you. BLNK, 30-min. We'll check those out again tomorrow. All right, ticks back down. You're not really getting any panic coming in, though. So we get these nasty flushes in the ticks, but for the most part, VIX is pretty subdued. So how's advanced decline? Advanced decline holds all right. Still above 0. I mean, here's what we need. We can look at internals till the cows come home. These 30-minute, 15-minute, 5-minute squeezes, they got to give here. So it's kind of a matter of, okay, does the 15-minute squeeze fire long? And then in the process, it triggers the 30-minute squeeze to fire long. Then you probably got a pretty good push. Or did these all fire short? It's all kind of tough to gauge in the chop, though. But all right, guys, I'm going to make room for the next presenter here. I'll give you an extra couple minutes. Go heat up your coffee, stretch your legs. But I wish you guys the best of luck throughout the rest of the session. I'll be back in here tomorrow. But for now, I'm looking for a bit higher in these markets here. So GameStop, watching some Zoom, and then seeing what else sets up here today. But I appreciate your time, guys. I'll talk to y'all tomorrow.
For joining us for Simple Stream Week. If you would like to continue following our market analysis and get access to other free education, sign up for our free room with the link in the description.
Good morning, everyone. This is Henry getting into this next little session with you guys. Got about 27 minutes that I'll be spending with you. Excellent. Thank you, Mirza. I appreciate the audio and video confirmation. Let's see, William wants to look at the double diagonal and its management with more detail. How and what to roll and close based off this and then that price action. You know, I'm always happy to go through it with you, but the kind of long and short of it is that it's not terribly advanced, right? So again, the big part that is the beginning of it is that at the very least, we have to keep the position on at least into the middle of next week. Now, if we have a side that is tested, one of the ways that you can do it is to just close the position, right? That you don't have to keep holding it and you can just close out the trade in its entirety. You can also open up another one of the trades. So, which is to say, you know, like right now, we're putting ourselves pretty much in the middle of the range. If we were to have a move up and that short side of the call becomes tested, you could put on another one of the positions, right? Because then you're going to end up having something more like 4 peaks and it would be embedded somewhat like that. So that's one way you can do it. Or, you know, close out the entire position. And outside of that, there's not too much else to comment on. But I will be with you, obviously, every day that I have a session. We'll speak to the position. And also, you know, in the presenter posts, you can always go through and just click the little gear towards the top right-hand corner of that presenter's posts. And you can search for, 1, either the symbol, or 2, you could search for my name. And anything that I post on it, you know, you will find those updates on it. So I take a lot of pride in my alerts, and that is that, you know, I'm not going to make some type of change and then come in a week later and you don't know about it. You know, if that is the case, it's because you weren't paying attention to the alerts. But if I do something, it will be sent through that presenter post dialog box, and then, you know, and I'll send it to you the moment that I take the order. So keep an eye on that. And outside of that, we just kind of have to hold tight for a little bit. Good morning, David and Monica, Tania. Great to see you guys. Thank you all for the greeting. Kim the Aquarian, that's one of my favorite handles seeing in here, but thanks for spending a little bit of your morning with us. Joe and Dragon, good morning, Lorna. Do you use the point of control in your consideration on these? I do not, though I can see how that would be a useful tool. And sitting on my hands is harder than the intestinal fortitude. Yeah, you know, that's an interesting comment to make. And if I'm reading into it correctly, it's to say that you're better at taking heat than you are at doing nothing. And I think that's actually a really interesting thing that you said right there. And it seems kind of off the cuff, but I think there's a lot of people that are probably that same way. But then if they really ask themselves, like, what would I prefer my account look like? Well, you know, it would be that, you know, you're not involved with things as often. So it's an interesting kind of self-reflective thing to say. But I'll do what I can to help you with it. And then could you explain when you like to use the double diagonals, as I didn't hear the original trade? You bet, David. And I can show you another spot of it because I've got the exact same trade on in MCD, right? And there are a few points to it. You know, sometimes it's like you could do a whole class on this, or, you know, we could try to get through it in about 5 minutes. And both of them would actually be good. You know, the classes are always fun because you can dive into the concepts with so much more detail. But if you just wanted to try to do it in the couple of minutes that we have together here, the things that you want to see, I would say begin with looking for a chart that is sideways, or maybe the thing that they really need to begin with is the moment in time. And you need to be somewhere right in here, or maybe even somewhere right in here. You cannot be here, and you can't be any further past it, right? Because what you're looking for is a moment in time that you have this expiration. You see how I keep the dotted lines on my chart for expiration? You know, we all know third Friday of the month is expiration, but seeing them visually on the chart I think is helpful in this way, because what you are trying to do is to sell options that will revolve or expire in this series, right? Because they will not have a negative impact from the rising implied volatility. If you're selling the strangle, you are short volatility. These contracts will not get juiced up because of earnings. They will expire before earnings take place. It's pretty basic, right? If that first part of it makes sense, then you can see, okay, I can see why you might be trying to sell a call here and sell a put here. That's pretty straightforward, and it's not going to be impacted by the implied volatility. That is also naked exposure, right? You're short a call and short a put, and that has a fair amount of risk involved. To help mitigate that risk, you then step out into this series, and this is where you buy the contracts. So you need to be in this moment in time where there's still some premium here to be sold. You see how I told you how you can't do it right up against expiration? Well, because the short strangle is not going to have any premium once you finally get up there. So you've got to be somewhere like this in the moment in time. And that, you can be lenient. The more time you have, the more premium in the strangle. The closer you get to expiration, the less meaningful the trade will be. So again, we're selling here, and then we're buying vol back here, which, it's not to say that implied volatility will go directly higher, but if nothing else, it helps combat the theta, right? Because when you're buying the contract out here, that the passage of time will slowly erode it. Well, that is, you try to fight that a little bit from the implied volatility that's still in it, right? So for the trade in MCD, it's up about, what, $30 right here? So this is seeing it further into its maturity. You see how, this is where we would have maximum profit, and this is where we are now. So these are the current prices that we're trading at. This is how much P&L we have open, and you're just kind of leaving it right there, and ideally staying pretty much centered. There's that little bid for the NASDAQ. Felt like it was going to try. It made me sit there and wait for it all morning. But bam, there's a little pop. So I'm not going to chase that bid, but it is nice to see what I thought was going to come through, starting to show a little bit more, a little bit more of that coming through. But that's the idea. And that's, like I was saying, I don't know if I finished the idea completely, but you have to have that relationship in time where you have two option series, one that will not be juiced up from earnings and the other that will. And then you want to have something where you're basically in the middle, right? Don't do this in something where a squeeze is firing or it's a big directional move, but do it, where my assumption was to say that these lows will hold and these highs will hold. So then, you're just thinking that you're somewhere inside those ranges. So that works for MCD because of its proximity to earnings. It works for almost every name in energy, right? Because all of these, I guess in the case of Oxy here, we're a little bit closer to the lower end of the range, right? I'm trying to think that the 100-day may offer some support, but you see how this is the same thing, where this earnings series will not be impacted by the rising vol of earnings, but this series will. So we sell this series, buy this series, and try to see it stay inside a range. And I think that would be the little 5-minute class. If, like I said, energy, MCD are all showing up, but this is something that you try to use, roughly 4 times a year, right? Because there are 4 main earnings seasons each year. So you can't always apply it because, the day of earnings, well, you can't put that trade on then. But with this, proximity in time, there are a couple of ways to try to pit those to your advantage. But good morning, Puzz. Good to see you today, and thank you for the feedback, Tania. I know that is one of the more important aspects of trying to follow along with somebody. I know that also it can be somewhat of a pressure thing where it's like, all right, we got to have trades. And it's like, I'm always looking but there's also something to be said for being okay, being a little bit more patient. I have had to do a little bit less, right, through some of this recent environment, but you know, that's okay. Today is just the full-on short covering move, and will be interesting to see how far it can push us. The work that I was given on the S&Ps, I believe, sets us up into 3,900. If we look at this again just briefly off of the 15-minute chart, maybe it's better off of the 78. You can see a little bit more of the action, but this is the gap from back here. Probably need a little bit bigger time frame, actually. But it's this right here from where you had it on the 10th, and then you move over the weekend into the 13th. You'll see that gap is right there at about 3,900. So that's just what I'm eyeing right here. And that's 100 points, 110 points. So that'll be a meaningful move. But that would be just enough to clear that previous swing high, to kind of see that flurry of activity into it. Maybe you could even push a little bit above it. But I think once you get those next 100 points, that's where you start looking for, you know, a couple of spots to at least have something on to the short side. And you bet, William, always happy to answer questions as best I can. I know anytime you put something like that on that's new, it can be, you know, it can spur more questions. But, you know, a couple of months from now, when you've done a dozen of them, like, oh, you know, it's kind of second nature. But let's see, you want to look at Costco to 500. So we're sitting here trading at 474. I would prefer to give it to you to say that you will have resistance at 500, right? You know, to say that you're going to get the additional $25 higher, I think is difficult. You know, I guess it's okay. You know, like when I look at this weekly chart, I enjoy using the 10 and 34 period moving averages. You happen to notice that 34 is right there at, you know, it's 498. So, you know, the psychological value, maybe some of those weekly moving averages, the broad market that, you know, feels like it's got a little bit more in it here, I definitely wouldn't argue with you, right? Like, I don't see any reason to, you know, yeah, sure. I think you could go ahead and head on up into that. I don't know that I have a direct setup off of it. I'm going to pull this back to the daily chart real quick. Recovering the 21 EMA today with a pretty decent stand. And then inside the most recent decline, you have cleared the 618 retracement there also, right? You're doing it today. I've got that level at 472. So it just helps you think that if it was going to fail, usually you're looking at, you know, this is the bearish trend, then it fails at the 50 or 618 retracement, right? Retracing back up into that. And then that is where you look for the resumption of moving back lower. Well, it's cleared the 50 and it's cleared the 618. So those are constructive steps to move back into the old high and then the extensions thereafter. So 491 is the high that I'm measuring that from. You get 491 and you asked me about 500. That's close enough, right? And at that point, I wouldn't be willing to give very much of it back. So I would say at least into the old high of 491 seems like the path of least resistance that goes along with the direction that I've been giving for the market. So it all looks okay. And then do you have any premium selling credit flies that we could put on right now? I can always come up with one. Now, does it give you as much edge as you might prefer? I believe it was Tuesday that Roberto, I want to say through this venue, through this open trading room that I do on Tuesdays and Thursdays, was asking me about the SPY, put side unbalanced fly. You'll remember that he had asked around the 370 body, and it was going somewhere around a 35-cent credit. And we spent a little time on the trade, you know, me telling you like, hey, that looks just fine. Well, as we sit here at, almost 380, yeah, the trade that would have yielded the full credit that you took in. Now, can I do it again? I don't know. You know what I mean? It's like at that moment in time on that Tuesday, and especially since the question was brought to me with a specific strike price, and the idea was basically already made up, I can look at that and tell you, yeah, I think that's good. If we were to do it again right here, there is a little bit more of a degree of difficulty. I believe the markets are set to move higher. So if you wanted to do it, like say around the 377, you could try it right there. I almost put on some bullish ideas in the spiders this morning. That broken wing butterfly was one that I looked at. The way that you're asking to do it for a credit could be something like this. Gosh, even the 375 would still go for a credit. I'm going to look at the deep and wide 1 month 3-strike unbalanced butterfly. And if you'll get in the habit of using those context menus, it'll really help speed up, because it just puts you exactly where you want to be, right? So you're utilizing a put that is $2.50 out of the money. You have $3 of wing distance on each side. So that makes it a little bit easier to calculate your risk. Like let's say you took in a 50-cent credit. Well, then you have $250 of maximum risk. If it stays exactly where we are right now, this is always a fun one to do, like especially if I could pause it. Let's see, we'll just use quick math. But let's say that you are right here at $377, and we're going to ignore the cents for just a moment, and we're going to say that we close at 377. Well, then how much is this trade worth? And I know you probably know this, Tupac, given that you asked about the trade. But remember that when you're setting these up, it's not just for the credit received, right? You do get a credit on the opening transaction. In this case, I've got it sitting at 50 cents. But then if you fast forward to tomorrow's expiration and you say, all right, we closed at 377, what is my butterfly worth? Well, the 372 puts, those are worthless. The 375s, those are worthless because they're $2 out of the money. But the 378, that put is worth $1. So you have the $1 of intrinsic value from the 378 put. You add that to the 50 cents that you took in, you just made $1.50 on it. And that's part of why I love those strategies so much. Now, the other side of the coin is that if the markets get hammered tomorrow, and I actually think there is a chance, I use that term somewhat loosely, of getting hammered because we've seen so much volatility lately, right? But the Stock Traders Almanac does not have a great historical record of tomorrow. So if you put this trade on and we took in the 50 cents and the S&Ps are down 100 tomorrow, you're going to lose $2.50. But, that's probably where I'll leave you with it as far as, asking for direct spots to put it on now. Tuesday into Thursday, I gave you a great spot to consider it. Fresh, doing it again right here, I don't know if I see it as clearly, but that's the way that I would do it if you did want to do it. I had a great thought that escaped me on the last of that, but oh yeah, I remember now what I was going to say. I was saying, I know that you're familiar with these because you asked me about them, when I see you through the various rooms. If you are newer to them, really spend the time to learn them and compare them to the put credit spreads or even the at the money put credit spread, because you're almost always getting a better risk reward with a higher probability of success. So I think that's a great adjustment to make, that instead of doing those, that you do the unbalanced. And then if you want to express a more bullish opinion, you could always widen out that risk wing. See how by doing it at the 370 instead of the 372, we're now taking in $1 and a dime, $1.20. Those credits are going to be much more meaningful. They, of course, will have much more risk, right? But I wanted to say that to like right this second. I feel like you would want to emphasize a more bullish point of view, and widening that risk wing is a direct way of doing it. But good seeing you in here this morning. Let me know if you come up with any other questions. And then I've been in and now out of Generac, which is a bit of a seasonal hurricane stock. It seems cheap, but dodgy, kind of risky, and the options seem pricey. Well, if you're just asking for my opinion on it, William, GNRC is a do not trade stock for me, and I probably know where you came up with the idea, again, and you know that there's no ego about this, that as I go through trading, trust me, I know how it goes or how it can go. But, Generac is just not a stock that's worth trading, and really everything that you wrote in that comment, it's almost like your intuition just telling you like, hey, this is not really a good spot to trade. And it just isn't. The volume isn't there. The options aren't there. It's like, I wish I had the best great analogy for it, but it's stuff that like looks cool from afar. And then as you get up closer to it, it's like, ooh, this actually is not very good. And trust me, I've had plenty of experience trading Generac. And at the end of the day, it is just not something that I think we should be involved with. If you look at the volume today, 370,000, it's like, okay, you've seen a few shares trade hands, but the options chain is generally kind of sparse. And these are all the things that I think lead down to a path of more difficult trading. So I really do not see anything that I could tell you to do there. And I think that, you're kind of asking like, hey, it's kind of dodgy. That's like the perfect word to use for it. And after having some of my experience with it, I leave that one well alone. And then could you look at XLF and Goldman Sachs, Morgan Stanley? It seems that these financials are consolidating, possibly getting ready to go lower. Well, let's start with the ETF. It's tough to call because clearly it is quite bullish, or excuse me, quite bearish. There's nothing good to be said about it. The fact that it's fallen so far in recent weeks, sometimes makes it tough to see it immediately move lower. But, off the weekly chart from the low at 1749, in this big picture point of view, I would say at least testing the 50%, if not the 618, is viable, right? So I think that seems like a fair bearish way to look at the weekly chart. And then on the daily, yeah, think about how, what price has done, whatever it's done for the past week. All that's really done for the moving averages is allowed them to catch up to price, because when price accelerates from the moving averages, it creates the gap or more of a distance between them. It just needs a little bit of time to let the moving averages catch up to it. It's sold again, in this case at the 5, which is the most aggressive moving average that I'll use. And yeah, I think that would be fine to look for more of a continuation to the downside. At least I can't call for a reversal until it gets back above the 21. So I think you are on the right page with that one. My pleasure, David. Thanks for being a part of the session today. I'm glad that's helpful. And then NIO, I don't really trade a lot of. I don't really have too much of an opinion on. And then Sergio, how do you read XLE as far as a shorting opportunity? I think XLE is a little more neutral at these levels, but I may not have a lot of reason to be, it could be more bearish. So I guess just the tough thing for me is that when you've fallen so far, to say, hey, now let's look at shorting it, you're a little late to the idea. From the high down into where we are now is a 22% correction. So, it's somewhere between saying a lot of that has already happened versus the other part that says an object in motion tends to stay in motion. So, I like at least you're not trying to buy it. It has every reason to keep moving lower. But, I also just remember no matter which way you're going, always give yourself that 21 EMA. Because if you load up short down here, and then you're sitting at that 21 EMA thinking, ooh, that's a little painful. Well, it's just reverting to the mean. So right now it's still one time framing. Every day stays inside the range of the previous day or lower. So that tells you that bears are still in control. But whenever they lose that control, the snap back to the 21 can be swift, and that's what you don't want to sit through. So I believe you are correct in the bearish assessment. Just be a little careful with it at these prices. And then let's see, we'll do one more question here as we round into the top of the hour where Dragon notes a lot of intraday squeezes are setting up on these financials. Well, the only thing that's tough about it, I guess, is the S&P and the NASDAQ all look just fine right here. So if you see a lot of intraday signals that you're working on to the short side, maybe it's just a matter of timing. And maybe it's a matter of timing it with, where do I have it here this morning? I had to close Chrome because it was giving me some trouble before I was getting into the room, but I open up that, it's read.amazon.com. That'll give you the web-based version of looking at your books. And inside that, it was just showing that tomorrow has a real bearish tendency. So maybe it doesn't happen today, but maybe tomorrow, you see a little more of that selling in the financials. It's at least one thing to keep in mind as you get ready to position for those. So that is what I've got for today, guys. As always, I appreciate you being here, and I hope you found the 30 minutes about as packed of information as I can make them. A good discussion on some of our open ideas. And yeah, thanks for being a part of it. You guys have a great rest of your Thursday, and I'll see you again next time.
For joining us for Simplish Stream Week. If you would like to continue following our market analysis and get access to other free education, sign up for our free room with the link in the description.